Hey, Renter Retires, it's Adam Schroeder here with another episode, joined as usual by Zach Lemaster, the founder and CEO of Renter Retirement. And we are pleased to be joined today by Eric Moeller. He is the CEO of Freewyld. And we're going to talk about the short-term rental market today. So, Eric, thanks for joining us.
Yeah, thanks for having me on, guys. Appreciate it.
Absolutely. So we always start off at your beginning. So what was your first real estate investment? How did you get the bug?
Oh, yeah. I got into real estate. I bought my first property when I was 19. So I grew up in a blue collar area family. So always working on properties, construction from the roof to concrete, all that stuff. And that brought me into the interest of flipping houses and, typical real estate investor story of reading Rich Dad, Poor Dad, which kind of opened up my eyes to real estate investing. And I read that when I was in high school or right after high school. And by the time I was 19, I figured out, and this is the good old days of 100% financing, figured out how to get a credit partner, and we bought a property. I moved into the basement, renovated the whole house. Me and my father, we flipped it, made some money, bought two, and just kept going down that process. But that journey's been crazy, market crash kind of got us out of that business, brought us into the rental business. And then that fast forwarded to about 10 years ago when I got into short-term rentals. So yeah, I've been in real estate essentially since high school. That's all I've ever done.
Yeah. And so that was you started out with the burn and flipping. So what was your first short-term rental investment? Can you tell us a little bit about that?
Yeah. So actually, the third property I ever bought was a traditional vacation rental property. And this is before Airbnb was even a thing. We were renting on Craigslist, essentially. Craigslist and VRBO. So I was I'm from New Jersey. That was down in the Jersey Shore. So I bought a few of those. The market crashed. We lost those because we just bought it at an insane inflated rate. And then I didn't get back into short-term rentals until maybe 5 or 6, 7 years after that when I moved out to San Diego. So when I moved out here, instead of buying, I was focused on a model called rental arbitrage, when we'd rent properties and then re-rent them out on Airbnb. And this was good old days at Airbnb when it was first getting started. So just making an outrageous amount of money and putting deals together with investors and developers of like, hey, we'll rent all your vacancies if you give us permission to rent out on Airbnb and all that stuff. And we scaled that to about 150 properties pretty quickly. And then that moved into property management, luxury property management, which then led into what we're doing now, which is buying these old vacation rental communities and boutique hotels and then converting them to modern short-term rental experiences.
Eric, it sounds like quite the journey you've been through in the short-term space, and you have been someone that's been investing in short-term rentals before it was really a common practice and probably regulated industry in a lot of cases. So it's interesting to hear your journey. Do you still do the arbitrage model or no?
No, I got out of arbitrage right before COVID. I would say like 6 months before COVID. I was making this switch. I saw the writing on the wall, more competition coming into the marketplace, institutional type of investors coming in and companies coming into the market, leasing up all full buildings and downtown areas, and saw the writing on the wall with regulations. And I'm like, hey, if something happens to the market, we're stuck with all of these leases and all this debt and no asset. The only asset in arbitrage is cash flow. And then 6 months later, the world stopped turning. That was like, okay, the model still works to a certain degree, but I'm very cautious about scaling it.
Yeah, I mean, and I think that's really geographic dependent. There's some areas that really boomed during and post-COVID for short-term rental, but those are areas where there wasn't so much government regulation. I don't know if these were particularly in California or not, but just for the audience sake, for arbitrages, for example, renting out a property on a long-term lease where you're the tenant and having permission to go and lease that on a short-term basis, where you can you're arbitraging and making the difference because you can short-term rent it at a higher rate. Now, of course, you're having to in most cases, navigate the leasing of that and make sure things go well and have procedures in place. But that was a very common model. And there's still people that are successful with that today, but I think it's become much more common where you have, even as you mentioned, some larger people coming into the space. But Eric, I want to talk about your transition. So most of our investors, they want to be passive or generally passive, or they're newer investors wanting to get started and to grow and scale their portfolio. They like real estate in general. We sell mainly, our platform is mainly focused on long-term rentals for long-term rentals for single family and small multifamily. We do sell some short-term rentals. And one unique thing we work with people on is actually the ability with new construction properties to possibly, if you are really motivated to get the tax advantages of a real estate investor, specifically talking around accelerated depreciation, you rent out, you possibly could go through a scenario where if you can't qualify as a real estate professional, you buy a new construction property, you furnish it, you self-manage it for that first year, get the short-term loophole, and then you can take accelerated depreciation on that property next year. After you put it into service, you can, turn it over to property management, or as many of our investors have identified, that it's actually not that difficult to self-manage from a distance with the right systems in place. But let's talk about your transition. So I want to hear your opinion for people first getting started in the short-term space, recommendations you have for them, tools and resources. But let's talk about your transition to short-term rental, because it came, like, you kind of jumped into short-term rental very early on before, as I mentioned, before a lot of people, there was a commonly accepted thing. It was real popular. Did you own long-term rentals? You were fixing and flipping. Did you own long-term rentals? I mean, what was the psychology behind, let's look at short-term rentals?
For sure. Yeah. So through my real estate journey, like we were flipping a lot of houses at that time. And the whole goal was to, buy, fix, and flip, get that cash flow, and buy long-term rentals, right? So typical real estate investor type of approach to build long-term wealth. And this was, I was young when I got into business, and, I didn't know how to run businesses. I was learning as I was going, and we were successful at what we were doing, but we were also not really building the right systems. I was working with the wrong people. I was just inexperienced at running a company at that size that we're running. And I started getting really burnt out with the business model I was developing. I was getting sick of, we were buying anywhere between like 4 and 12 unit buildings, but we were buying them in urban areas all throughout New Jersey and like Philly area. And they weren't the nicest assets. They weren't in the nicest areas, and we weren't dealing with the nicest people all the time. And I was getting burnt out with that. I was getting burnt out with having to always be there, hands on the asset. And this is where my mind started turning of like, hey, I want to build a business that I could run online. It's a lot more popular than it is now than it was back then. But this is when we were all kind of figuring that out. I wanted a business where I wasn't kind of handcuffed to the assets, right? So I had an opportunity to come out to a mastermind in San Diego, met a real estate investor, took me out, took a few of us out on his boat here in San Diego. And he was pointing at a building that he just bought, he bought. He's like, all those units are all Airbnbs. And I didn't understand what he was talking about at the time, because again, this was at the beginning of Airbnb's growth. And he's like, it's all Airbnbs. We're making 2 to 3x market rate rents on it. And I have a property manager that runs it all, and it's incredible, right? And I run it all from my phone. Here, take a look at it. So that was the spark for me of like building a business that was online, like an online based business that still revolved around real estate. And I was coming out of this space where I was like, I didn't want to raise more money and go through this process of buying more properties at that time. So that's when I stumbled into the whole rental arbitrage model. And I was like, hey, there's something new here in real estate where you can rent somebody else's property and re-rent it and make 2 to 3x market rate rents. Like, that's a business model. And you can run it from all these apps anywhere in the world, right? So that was the introduction for me. And I was like, hey, I'm going all in on this. And again, I kind of shared the journey, and it's it's kind of full circle because we're now back into the real estate development and ownership model where we're buying these properties, but we're leveraging short-term rentals to maximize cash flow on these properties. So yeah, it started with this idea of like, hey, I want to get away from having to be hands-on and not handcuffed, but be in this one specific area and building an online-based business. And Airbnb kind of really opened up that opportunity for me to do that.
You mentioned that not only are you doing, short-term rentals, but you're doing luxury short-term rentals. Can you define kind of where is that line? Like, what is the difference between just a short-term rental and a luxury? Is it just price point, or what differentiates the two?
Yeah, that's a great question. I think it's brand and experience. So it's brand and guest experience. You could be in a luxury property that, we have some friends that run a luxury treehouse company on Airbnb, and they make an outrageous amount of money, and it's booked all the time, and they're booking it at luxury rates, but it costs them $40,000 to build each cabin or each treehouse, right? And the materials in the property it's not the nicest thing in the world, right? It's not luxury hotel when you think of that, but the experience is so insane. It's you're staying in this treehouse overlooking the mountains, and it's such an incredible experience that now you're able to drive this demand in this property, which then drives the ADR, right? The average daily rate. So for us, we put a lot of focus into the experience. So we're very design forward in all of our properties. We invest very heavily into the design, but then we invest very heavily into the guest experience. So we think through every single step that the guest is going through. And that drives such a higher demand on the platform at Airbnb than just an average property that has IKEA furniture in there, right? So like you go to Florida, you go to Orlando, and there's thousands of Airbnbs that are down there, and they all kind of seem to be the same, where it's all like, these cookie cutter type of large box houses with all these IKEA furnitures in there, and they're all priced at the same. But they're larger, beautiful properties, but they're not hitting that mark on that air quote luxury dollar amount because they have not invested into that experience at all.
Give us some tangible takeaways, though, if you can expand on this for the person that does own an average or looking to own a kind of average property they're turning into a short-term rental. Maybe this is even a long-term rental that they're converting over. What are some low-hanging fruit items that can improve the experience for the average person?
Yeah. So
in the kitchen, man.
What's that?
Salt and pepper in the kitchen. It kills me every time I do a short-term rental. They don't even have that. I'm like, man, you can't expect me to bring salt and pepper.
Exactly. It's first starting with those things, right? So it's first starting with there's a baseline to invest into that experience, right? So I always tell everybody, like, you got to start with understanding who you're serving in your properties, right? So there is what we call a guest avatar, right? So there's people that rent or they bring Airbnbs to the platform, and they just hope anybody books the property. Where what we did with Freewyld, we got super clear on who we were serving and what they were seeking in the marketplace. So we have a full guest avatar breakdown of what that looks like, right? They're traveling from either San Diego or LA. They make, mid six figures. They're willing to spend more money for a higher end property, but they're also looking for a experience to help them disconnect from technology. We can get into that. That's part of our brand. So I think getting clear on who you want to serve first, right? And it could be something as simple as I want to serve families with pets, right? And then developing the experience around that in the property, right? Two is having those baseline, right? Of like, if you're staying at a short-term rental, you don't want to have to bring your pots and pans and your oils and all that stuff. It's like there's a baseline that you have to maintain in these properties that 99% of guests or hosts just forget about. And then three is really, really investing in the design experience of the property. most people will just stage it themselves and again go to IKEA and throw the cheapest stuff in there. I think guests are getting sick of that because everyone, it's like there's no soul in the property. So really investing in that experience that talks to that guest avatar that you're looking to serve. Does that make sense?
Yeah, we have, and I think those are all real tangible and being intentional on who your ideal guest is. That may be hard for someone to conceptualize if they're just saying, "Hey, I just want to do a short-term rental in this area." I mean, first and foremost, make sure you have the baseline amenities. Make sure you have good photography. Tell a story around the rental property to separate yourself out. Try to have some unique, something unique about the house, as you mentioned, just even design, painting, furniture, talk about the amenities in the area that you have accessibility to. I think the more unique things you can add to that, the more successful you're going to be versus just, like you said, Eric, throwing an Airbnb on the website. I mean, so a lot of our short-term rentals that are higher end homes, I mean, we have the top performing houses in Summit County, that's like Keystone, Breckenridge, Dillon in Colorado. And these are highly sought after destinations. And things that we do are, we have everything you could possibly need for a ski town stay at all points of years. There are bikes for people to use. There are scooters. There are skis if people want to rent skis. I mean, there are used skis. There's sleds. There's an experience. There's a Keurig and coffee, like all types of coffee for all type of coffee connoisseurs. Each room has its own theme and name. And has even down to the room has its own experience. So, I mean, those are just really interesting things the more detail oriented you can pay attention to and how you showcase that. I think that's really important. Let's play the devil's advocate for a moment though, and talk about someone who's thinking about getting into the short-term space and is concerned about, where things are at. Regulations is always a big concern. We talk about being in areas that already have established regulations instead of a gray area, because then, you don't know where things are going to. I'm curious to hear your opinion on that. But also, like, how do you know if you're going to be successful converting a property to short-term rental or starting a short-term rental in an area? Because we've seen such kind of fluctuation in a lot of areas. We had this during and post-COVID boom in a lot of areas where people are traveling locally instead of internationally. Seems like some areas have had a big dip from that. And talk to us about where you think the market is and how someone can identify if a good area to be successful with a short-term rental.
Yeah. I mean, I agree with what you just said. It's like you have to invest, especially if you're investing, you have to invest into markets that already have established short-term rental laws in place, right? So 100%. We've had some properties and markets that had that gray area, and then they come through and we're doing great business, and then they come through and pass some laws that are not favorable to our business, right? So you have to invest in those areas. You have to seek those areas without a doubt. Everything that I was just mentioning, that guest experience focus and creating unique experiences, to me, is the hedge against the market, right? So we have this huge push of people that are looking to just get Airbnbs as real estate investments, but they forget about the whole hospitality side. So there's a whole bunch of properties that are in the marketplace, and regardless of what's happening to the market, the properties that are focused on unique experiences will always do better than the marketplace, regardless of the size of the property or any other factor. If it's a unique experience, guests will seek that out and they're willing to pay more money for it, right? So we're investing heavily into those types of properties and those types of experiences. We only focus it, as I mentioned, in markets that already have short-term rental laws in place. And if we don't, we're looking for a different type of asset that we can control, essentially hotel licensing, right? So if we want to move into a market that doesn't have short-term rental laws or strict short-term rental laws already, we seek a different type of asset that we can buy and control as a hotel, with a hotel license, but we run it as a short-term rental, seeking, marketing to that traveler that's willing to spend a little bit more for that experience, right? So There's a lot that goes into that. Obviously, I'm assuming most of your listeners, are they investing in their backyard? Or are they kind of focused on markets outside?
No, they'd be looking outside of their own backyard. This would be in distance.
Yes. So those are really kind of where we start when we're looking for properties, and we're looking at 15 different markets to buy our next couple of projects right now, right? So, and most of these markets we haven't been to, but we were able to we have a checklist of understanding, is this a great Freewyld market for us to move into? We can get into the details of like how we analyze properties for sure. That gets into the nitty gritty of it. But those are the top factors that we seek. Does it already have a short-term rental industry that we can plug into and leverage? Can we create a unique experience in this place? And can we draw from a larger travel pool in that marketplace?
I mean, just from a saturation standpoint, though, because I could see a lot of our investors saying, hey, this seems interesting, like looking especially from if they want to be a tax-savvy investor like we were talking about. But I mean, with any of these new construction properties we have across the country, how do they know? I mean, we'll do market research for them to some degree, but for doing their own due diligence, how do they know if there's oversaturation in an area? How do they know if they're going to be successful? And for someone that just wants to come out of the gates and improve this over time, we all know that short-term rentals, your first year is not your optimal year. It takes some time to build up, repeat guests, standing out in the marketplace. But how do you know if an area, I guess two-part question, how do you know what the average income will be on a property? Is it as simple as getting on AirDNA and just going with those as a initial assumption? And what about saturation? Does AirDNA have occupancy rates that you can just assume would be applicable for a similar type of property, same location? I mean, is that as simple as that or what?
Yeah, we use 3 different tools right now to analyze markets and individual properties. We use, of course, AirDNA, Key Data, and Price Labs. So those are three tools that we use to really understand what we call revenue management within the business. When it comes to saturation, we're not 100% concerned about saturation. What we're looking for is comparable assets to the type of experience we want to bring to the market, right? Every market is going to have a lot of short-term rentals. Most of them are not going to compete with what we're bringing to the marketplace. Now, if you're in the mindset of like, hey, we just want to get I don't know what terms to use here, cookie cutter style short-term rental, right? Where it's just focused on cash flow. Those properties tend not to do as well. And you have a lot more competition in those types of short-term rentals, right? So for us, we're looking at what can we create in this marketplace that will stand out and become one of the top listings in that place, right? So we use those 3, and then if you know the type of asset that you want to bring to the marketplace, you got to study the comparables, like any other real estate. You got to study the comparables and understand what are the top 5 properties doing differently on the Airbnb platform that's making them stand out compared to all the other listings in that marketplace.
Yeah, I think that's a key thing to do. Look at the top performing properties.
You have to. Yeah. We don't look at the whole market. We're not concerned about oversaturation, right? Because if you're just going to bring a 3-bedroom, 2-bath to, I don't know, say Breckenridge, and you're only focused on like, it's just going to kind of fit in with everything else. You have a lot more competition in that space. But if you start looking at what are the top 5 short-term rental listings that are comparable to the asset that you want to bring there, and then start really studying from photos to descriptions to amenities to reviews. What are they doing differently? And then how do you bring an asset that can compete with those top 5, right? Everything else, if you're just bringing a mediocre listing to the marketplace, in my opinion, I over time, I feel like they will phase out in this industry. They can do well, but I don't think they will do great.
Great. Any final words for someone that's thinking about getting into the short-term rental space? Good pieces of advice for someone looking to get started and You talked a lot about how to stand out, be successful. Any other thoughts, Eric?
Yeah, well, I mean, since we're talking to real estate investors, it's like, as a real estate investor, this is it was one of the best decisions I've ever made to get into the short-term rental space. It is so much fun to be able to create these experiences and invest in these properties. And this is a model where you can literally buy properties anywhere in the world. And if you understand the right systems and how to hire the professionals and manage those professionals, you can have the most beautiful real estate in the most beautiful parts of the world, right? And it's like, I don't know any other model in real estate where you can actually do that and drive incredible results, returns on your investment. So I highly suggest every single real estate investor, if they're seeking that type of investment, to get into it for sure, but to keep with the mindset that this is a hospitality business first, real estate investment business second. If you're not driving world-class hospitality, your real estate investment is going to be impacted. So you have to decide, are you the hospitality driver, or do you hire the best hospitality drivers and manage those people? Right. So I see a lot of investors getting into the space, and again, they try to take it on themselves because most investors are very ambitious. But we have to understand, it's a hospitality business first, real estate investment second. Either you're the obsessed with hospitality like I am, or you hire the people that are obsessed with it and then manage them to make sure that they're driving the best results. But yeah, I love this. I think real estate investors love it. You can buy and invest in the most beautiful properties all around the world, and it's a lot of fun. So I invite everybody in. Come on in.
Well, Eric, thank you so much for joining us. As we mentioned before, Eric is works with Freewyld. Tell us a little bit about what Freewyld is, how people can find you, and anything else that you want to leave people with.
Yeah, so Freewyld is a hospitality brand. So we focus on buying old vacation rental communities and converting them to modern short-term rental experiences. We buy these properties in nature-inspired areas that are 2-hour drives from metro cities. And we focus on really unique experiences, so cabins and unique structures. So yeah, if you guys want to learn more about that, just head to Freewyld. It's FREEWYLD.com. And then if you want to connect with me, I'm on LinkedIn. That's the best spot for it.
All right. Fantastic. Well, thank you so much for joining us and talking about this topic. I know we have a lot of people who are asking us about it on a regular basis. So really appreciate you taking the time out of your day to speak with our audience. To everyone else, you can check out our inventory at renttoretirement.com. That's both long-term and short-term rental inventory there on the website. That's at renttoretirement.com. Don't forget to leave us a review on whatever podcast platform you use. And as always, if you have any questions, send them on over to podcasts@renttoretirement.com. That's podcasts@renttoretirement.com, and we will answer them in a future episode. Really appreciate the time you spent educating yourselves today. We'll talk to you on the next episode.
Thanks, guys.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.